Palantir is down 27% from its recent highs. We're seeing a ton of fear in the market, and a lot of people wondering, is Palantir overvalued? So that's what we're going to discuss today. Is it time to sell, and why I'm not selling my Palantir? So with that being said, if you guys aren't already, click the subscribe button and let's get right into it. We're going to start off by looking at the charts here and exactly what is happening with Palantir. So let's go ahead and look at it. As you can see here, we have the earnings on the bottom, and they have absolutely been slamming these earnings out of the park. We're going to go through them in a sec. You can see that on the chart, Palantir just crossed over the MACD line here, the equal line. And we do have some good consolidation at the point of 151, which is a good support level. As you can see, it hit back here on the support a few months back. So let's go ahead and look at earnings first and what is actually going good with this company. So if we look here on the statements, total revenue, as you can see, the past 1, 2, 3, 4, 5, 6, 7, 8 earnings in a row, they exceeded growth expectations and their own numbers, up 70% from Q3 in 2025, which is fantastic. You can see we have gross profit of essentially $1.19 billion. That was up 82%. We have operating income, $575 million. Pre-tax income, really good. But the most important is net profit. It doesn't matter what's on the top line, it matters what's on the bottom line. $608 million. Guys, this is not a company that is burning cash by any means to earn your business. They have massive contracts, including over 6 of them that are over $10 million per year. They have over 200 that are over $1 million a year. They have lots and lots of contracts. And then if we pop over here to the earnings, you can see that it's slowly growing quarter over quarter. Now, the important thing why I'm bringing this up first is, although the company is down about 27% right now from its all-time highs, as you can see right here on the chart, we're looking back here at basically right here. So after they had a stellar earnings, again, they exceeded earnings there. It had a massive dip as well. So this isn't the first time it's happened with Palantir. Now, what we have to look at is what are the actual headlines that are causing the fear, the markets in Iran, or the war in Iran, excuse me, that's causing this fear, and then what to do about it. So if you haven't already, again, click the subscribe button. We're going to jump right into it. So here's the big idea. The market is misunderstanding Palantir. A lot of the spotlight is on AI companies, and that's just the realistic fact to it. Now, what's going to happen is as soon as that spotlight is shifted from all these AI companies to the AI infrastructure companies that actually have good implementations already to exceed their business, I think that's when Palantir is going to be back in the spotlights. This company is high growth. It's also a high risk stock. So there's not one without the other, and that's totally fine. And the reason why I'm okay with having a high risk stock like this is because over the past year, as it's been added into the S&P, we've seen really, really good growth, and we can't see good growth forever. We saw this with Google. We also saw this with Nvidia. No growth lasts forever. They can't be up without down. There's going to be corrections. People are going to start asking questions, but we have to see if this is backed by real performance or if it's backed by fear. And this is exactly why I like this company. So here are the numbers. Just like we looked at, 70% growth in revenue, 137% growth in US commercial contracts, 66% growth in the government sector, and then the rule of 40 is 127. If you don't know what the rule of 40 is, very simply, it's just how you evaluate a software company pretty quick. Okay, so that's really, really good. What investors get wrong about this company is most investors confuse these two things. So the left side of it is basically a stock price emotion. So they base a company off their emotions if they think it's overpriced. So fear, volatility, headlines. Now, if we look at the fear and greed index today, it's actually really high. It's at 15. So that's pretty not good. And the VIX is also still very high, 26.78. It did go down lower over the past couple of days, but you can see it closed out at a very, very high fear level. I'm recording this on a Friday after the market closed. Okay. On the right, we have the business and trajectory of that revenue, the business model, all that good stuff. So growing demand, very strong. Strong margins. We saw 600 million in actual net profits, and there's real big contracts for Palantir. So a lot of this, and the core message I want to get across is this stock is very noisy. There's lots of noise happening right now in the war with Iran and the tariffs being canceled. The business is getting stronger even through very, very tough times, which is a really good sign. Okay, so what Palantir actually does is important to understand, and we need to talk about this. This isn't just an AI company. Remember, I said a lot of the spotlight was on the AI companies. Palantir is a decision-making software. So this connects messy data, improves decisions, works in high-stakes environments in the defense, healthcare, enterprise sector. So not just with governments, not just with the defense, but also with big corporations. And then they also highlight they have better decisions equal real money and big changes for the people that they work with, which is huge. By the way, if any of this sounds confusing to you right now, I would love to help you in the market, helping you in your portfolio and really get your portfolio to the next level where you can enjoy your life, get some gains, especially in a bear market. So if any of this sounds confusing, I would love to help you out. We have weekly trading calls. You get to see all of my trade alerts and the full training course linked right down below in the first link in the description. So if that sounds like something that you want to do, click the link, book a call with my team, and we'll see if it's a good fit. We don't help out people that don't have at least a $20,000 portfolio. So if you do have over $20,000 and you'd like to make some good gains, learn about the stock market, click the link and we'll see you inside. But let's continue with this. So why war headlines actually matter more than you think. So conflict doesn't just create fear, it also creates demand in certain sectors. This is a high pressure environment, so more need for Palantir, especially in that defense sector. Normal times, it's kind of a nice to have company in your portfolio, but during crisis, it's very critical. And I think it's really going to help out with the revenue in the company. With the valuation, because we need to talk about this next. As you can see, we had a pretty substantial dip in the company over the past few months here. And a big reason why is the valuation. People are scared that it's overvalued. And listen, we've heard this story over and over with different companies. Oh, it's too expensive. The PE ratio is too high. That means it's a bad stock. And that has nothing to do with the actual fundamentals of that company. So high growth always looks very expensive in the moment. And I'll give you an example. If you look at that same home now in 2026, you're probably saying, wow, this is way too expensive. And this is the psychology that happens every year. With good companies, it's like buying a good house. There's never a bad time to enter in it. Because there's a dip, it's actually a better time to enter into it. We've seen these dips with Amazon, Google, and Meta over the years. So the real risk, this isn't a risk-free company, and we can see the company start to go on a bull run over the next 2 to 3 months, and this is a perfect time to really get into those shares at a lower cost if you haven't already, because we're seeing valuation compression as a risk, growth slowdown in the sector, and then market sentiment shift away from Palantir. Now, this is a premium business, so it's a premium risk as well. It doesn't mean Palantir is going anywhere, but we have to talk about the playbook. So how smart investors approach this. There's 4 key rules. You have to separate stock from the business. If the stock is going sideways, it doesn't reflect on the business. That's just reflecting on the overall market sentiment. We have to look at the business, which we've already done. So those numbers, check it off. It's great. Don't treat it like a generic AI brand. We've seen lots of these AI pop-ups everywhere. And when the water recedes, we're going to see who's swimming naked, essentially. There's a lot of these companies that are going to have a really hard time growing over the next 2 years as the real truth comes out. This is an actual company pushing millions and millions of dollars every quarter in net profit. And you have to understand the AI value chain and also manage position size. Now, I don't recommend having any more than 5 to 6% in any company because it's just too much of your overall portfolio. Now, currently, I think I have about 4% in Palantir. I'm going to keep dollar cost averaging. My biggest position is actually NVIDIA and SoFi. SoFi has been kind of getting destroyed lately, but as I'm sure you guys know, but we're going to be adding some more into there. So here's my bull case. I think this is why bulls are very excited for this company. There is elite growth, elite margins, and real adoption happening across multiple different sectors, defense, commercial, and with other governments as well. So this has a sticky enterprise usage, which means these contracts sometimes go out 10 plus years. So they're not going to go anywhere in a short time. In fact, there's what I think to be a lot more longer term AI and infrastructure needed by Palantir because there's more infrastructure being built. We've looked at CapEx from Facebook. We've seen massive companies, software companies building AI data centers and putting billions of dollars into building out the structure. We're going to need Palantir to back that up as well. The bear case is, listen, people are concerned about the valuation. I mean, it's not a lie to say that. They're sensitive to a growth slowdown. So when there's a sliding of the stock, sometimes there's just negative momentum. But the political and defense risks are probably the largest because when you're dealing with politics, you just never know sometimes. And so that's really affecting the stock at the moment. What I'm doing right now is I'm not panic selling. I'm watching very closely the execution of what's happening in the market, how the company is growing, what are the different shifts they're making within the space. It's a quickly changing AI space. and then viewing the dip as an opportunity. Like I said, currently hold about 4% of my portfolio in Palantir. I'm buying some more consistently. It's also a good time where you can look at selling puts to get into it at a good price and get some premium as well. So Palantir isn't just an AI company, and this is important that we need to talk about this. It's a defense stock, it's an AI stock, and it's a decision stock. And that's an important thing to keep in mind as you're looking at different companies within the space. So with that being said, if you guys did enjoy this video, make sure to leave a like, make sure to subscribe. And if you do need help in your portfolio, I would love to help you out. Like I said, book a call with my team down below, and we'll see if we can help you in the mentorship. I do have weekly trades, weekly live calls, and you do get to text me anytime within the group. So with that being said, thanks so much. We'll see you guys next time. Peace.